Okay, so if you're watching Central America for um, property investment opportunities right now, Panama keeps coming up, and specifically this huge development, Panama Pacifico. Our sources are suggesting that, well, the timing to get in might be particularly good now.
Exactly. And that's what we want to test today in this deep dive. Let's get past the shiny brochures. We need to look at Panama's, core stability, the specific advantages baked into Panama Pacifico itself, and really analyze if these big infrastructure projects everyone's talking about genuinely create a sort of a critical window for buying homes there.
Right. First things first, then,
Yeah.
the foundation. Is Panama itself stable for investment?
That's the baseline, isn't it? And Panama has a major advantage. It's dollarized. That just strips out currency risk, predictability. Foreign capital loves that. Plus, the government is actively trying to attract investment, things like the Qualified Investor Program.
Oh, yeah, I saw that. You get residency if you invest, what, $300,000 or more in real estate.
Precisely. It's a direct incentive.
Yeah.
And then there's the geography, the canal.
Yeah.
It all builds confidence.
Okay, stable foundation. But what about growth? Is the economy actually moving? Sources are pointing to like 4% growth forecast for 2025. Is that solid?
It seems pretty robust. The forecast relies heavily on foreign capital inflows and strong sectors like logistics, shipping, banking, which are pretty well established there. It seems quite resilient, less dependent maybe on volatile commodities compared to some neighbors. It supports a strong job market.
Which brings us neatly to Panama Pacifico itself. This isn't just any development. We're talking the largest mixed-use project in Latin America. Right.
Yeah.
Over 2,200 hectares.
It's huge, and it's all under this very ambitious 40-year master plan. But the crucial piece, legally and economically, is its designation as a special economic area, an AE.
Right, the AEE status. What does that actually do for investors or residents?
Well, primarily it provides massive fiscal benefits for companies setting up there. Think specific tax holidays, zero import duties on certain goods. It's a powerful lure, and it's worked. You've got over 330 companies already, big multinationals, regional players.
Like who? Any examples?
Oh, yeah. 3M, Dell, FedEx, major names. And together they've created something like over 17,000 jobs right there within Pacifico.
Okay, so that's the economic engine part. Jobs mean demand for housing. How does the residential side fit in?
It's fully integrated. That's the mixed-use genius. The master plan aims for about 30,000 houses and apartments. They're spread across, I think, 8 or more distinct residential projects within the zone. So you live where you work, essentially.
Creates a kind of self-contained ecosystem. And who's buying these homes? Is it just the local workforce?
What's interesting is the sources highlight a strong demand from high net worth individuals and expats, particularly people returning to Panama from the U.S., Canada, Europe. They seem drawn to the whole planned community aspect, the new infrastructure, the amenities coming online, schools, shops, future hospitals mentioned too.
Right, amenities and connectivity. And this is where the timing aspect comes back in, isn't it? The infrastructure upgrades.
Exactly. This is the catalyst people are watching now. You've got the massive fourth bridge over the canal under construction, and the Metro Line 3 expansion is designed to directly serve this area.
So improved access, dramatically improved access, linking it straight to Panama City.
Correct. Easier commutes, better logistics, and sources are pretty clear. We're likely in a pre-completion window. Once that bridge and that metro line are finished and the highway links to the airport are done, that added value, that connectivity, it gets priced in fast.
So the argument is buy now, possibly pre-construction, before that infrastructure premium fully hits property values. What kind of uplift are we talking?
Some projections suggest maybe 15% to 20% appreciation fairly quickly, say in the 18 months after those major links open. It's about buying that future accessibility today.
Okay, let's tie it all together then. You have the stable, dollarized economy as a base. You have built-in housing demand from the jobs created by the AE status. And you have this, imminent value jump expected from major infrastructure that's already funded and being built.
That's the core thesis. The long-term AEE benefits plus the short to medium-term infrastructure boost make it a compelling moment. The stability is there, the demand's built in, and the catalyst is visible on the horizon.
Makes sense. So the final thought then. This project has a 40-year vision. They're not just building houses and offices. They're aiming for a whole integrated micro-city.
A long-term play.
So thinking decades ahead, how might Panama Pacifico, if it succeeds on that scale, actually change the game for what luxury lifestyle or integrated development even means in Central America? Could it set a whole new benchmark?